Welcome back to this next video in the Unlocking Your Crypto Journey educational series. This is the last video in training module 1. So we're going to be talking about creating a success plan for you in the crypto space. I say we because BC PortCorp will be joining me for this video. So let's get into this and get you a success plan for your crypto journey. Welcome back, everybody, to this next video. We're going to talk about you having a success plan for this crypto space. To do that, I brought this guy back, BC PortCorp. Appreciate you being here, man. As always, this guy is dedicated to this series. Let me tell you guys. BC, welcome back.
Well, as always, it's a pleasure to be here and always happy to lend the helping hand when you need it.
Well, I'll tell you what, you have been more like above and beyond with that. So thank you so much. And I mean that from the heart, everybody's. As you've seen, BC has probably been the most consistent staple here in this series. All right, this video is going to round out module 1 of the training series. And I figured that at this point, many people are just itching. Even if they followed this series from the beginning, they're itching. They want to dip their toes in crypto. They're just going to do it, whether we get them there in the actual training or not. So I thought this would be a good place to put in having a success plan here. Now, we're not planning on giving you complete step-by-step, do this, do this, do this. That's not what this is about. We want to give you an outline, an understanding, some guideposts, and we're going to talk that through. BC, I'll tell you what, maybe you can start us off and go over what you think is the reasoning, the importance of having a good plan in place to make sure you're successful here.
Well, the key point of having a plan that you're coming in
is key number 1. Yeah.
The key point of it is that if you don't have a plan that you're coming into investing with, you're just speculating. You're throwing money at things, hoping that it's going to go in a certain direction. You haven't made any clear, decisive points that you want to get to. You don't have any ideas of where your money is now and where your money is supposed to get to. So you know where you're supposed to take profits, where you're supposed to be doubling down, or how you're supposed to DCA into this asset, or what the risk is on the asset. So there's a lot of points of having a plan. And the first part of having that plan is, where are you now and where are you trying to get to? And on what time frame you're trying to get there. And that's the whole beginning of setting up a plan. Because if you don't have that, you're just throwing money anywhere, hoping that something is going to get you rich.
Yep. Facts. And now let's be honest. We hear the stories all the time, which may have drawn some of you watching this video into the crypto space, where, yeah, man, poof, Pepe, poof, I'm a millionaire, or Doge, poof, I'm a millionaire. And yeah, do those kind of things happen? Yeah, sadly. Well, maybe not sadly for them, but yeah, it gives this space a bad reputation because you can utilize this space for so much more than that, and literally changing your entire wealth profile. But maybe we'll talk a little bit more about that as we get going, because again, this is going to be a little bit more casual. But BC's right about the plan, and one point I'd like to just add to what you said, BC, is like, when you're doing that, you need to like set up goals to reach that plan and make sure you write them down, because I don't know about you, but so many times, I say, yeah, my goal is to do X, Y, or Z by this time. But I don't write down those little incremental, or didn't write down those little incremental steps to get me going in that direction. And I don't know about you, but I found that I don't often succeed, or at least not to the degree I could if I did.
Oh, yeah. And I mean, that just goes into psychology. And not just with investing, but with any plan that you have anywhere in life. If you write it on down, it makes it a little bit easier to actually cement that goal into your future. because you have it written down, you know that
Right.
you wrote it down, and there's a big correlation between writing something down and your brain actually storing that information and then working towards that goal. So it's no different in your investing journey. If you have
Yep.
that
No,
clear,
facts.
concise plan that is actually written down for you, it makes it just a little bit easier.
Yep. No, exactly. And writing stuff down, it also gives you the ability, or eases the ability, to be able to track everything that you're doing. I mean, let's be honest, you want to make sure you're on track for whatever your goal is, because the one thing I've seen, I'm not trying to put words in your mouth there, BC, but the one thing I've seen is, like, man, I could get off track in this space so easy. Like, the next thing you know, I'm going in a what I consider to be a complete wrong direction. And I've learned to do certain things to help keep me moving in the right direction. And like I said, goals, plan, good idea. But we've already kind of teased something that I think, and something that you mentioned in a previous video when you were here, and we were talking about the kind of get rich quick thing, which is what brings a lot of people here into the space, let's be honest. And even I came into the space, it wasn't get rich quick, but it was more like, I need to make me an extra $100 a week. What can I do? I'm gonna mine some Bitcoin or something. You know what I mean? That's what started me coming into the space. But like, a lot of people see that success we were just talking about a minute ago, Doge, Pepe, whatever, and they think, man, get rich quick. But easy come, easy go, man. It's something to be rich. It's a different thing to be wealthy. And during that previous video that I'm referencing, and again, links will be in the description for that, you were very eloquent about spelling that out. Would you mind just spelling that out and talking a little bit about that for everybody right now?
Well, I mean, if you've been in the space for a while, you've probably heard about the SHIB millionaire. And at one point last cycle, he was a millionaire from SHIB, and then he rode that sucker all the way back down, because I promise you he didn't have a plan. He was just throwing money at
Right.
SHIB, opened his wallet one day, realized he was a millionaire. It was like, woo, we're rich. And then it
Yeah.
just as quickly was like, woo, we're not rich. Oh, crap. And he had to ride that all the way back out to this cycle to be a millionaire again. And who
Right.
knows if he sold? Because I didn't hear anything about him selling and taking profits this cycle. So who knows if he's still a SHIB millionaire? He could be, he
Right.
could not be. I don't know. But like, that's the difference between trying to get rich and trying to get wealthy. There's plenty of people that can get rich, but as soon as you have that money, you're like, oh, well, we got all this money. What do we do with it? And a lot of people just leave it in there. Is SHIB going to continue to run cycle after cycle? Who knows? No one knows. But you know what I do know, after being in this space since 2011, on aggregate, year over year, Bitcoin has 42% gains. I'm okay with that. The stock market, year
Right.
over year, has 10% gains. I'm okay with that. You don't have to throw your money everywhere. You just have to put it somewhere. And you have to have that okay time preference where, you know what, in 10 years, I'm going to be better off than I was today. And as long as you're putting that money to work for yourself instead of working for your money, then you will
Right.
come out ahead. And that's that big difference. Are you putting your money to work for you, or are you working for your money? And that's what investing is all about. You can trade and try to get that, oh, well, we need to make this much money this week and blah, blah, blah. That's fine too. But that needs to be part of the plan that you're setting up. And as you scale your growth, the plan changes with you. So it's not stable. It needs to change as you progress along the lines, the same way that you do in anything else in life. Say you have business goals and you're working at a company and you're like, okay, well, I started out here and the goal was to get here. Well, once you get to that new position, are you just okay staying there? No, most of the time people are trying to get the next step above. Well, what
Right.
do you have to do to get to that next step? Well, you might have to take this class. You might need to go into a leadership type position. So now you got to take a leadership course. There's all sorts of things that you will have to do in your investing journey the same way that you will do in any other journey in life.
Again, BC always bringing the alpha. But it is a mindset shift at the end of the day. Now, all of this, I guess, everything we've talked about in this first several videos with regard to coming into the crypto space as a newbie have been cemented in the beginning of you need to train yourself. You need to adjust your mindset to what it is you're looking to accomplish here in this space. And we talked a lot about the practicals. Like, okay, we just started off, BC led us off today with talking about you need to have a plan. Well, okay, you need to have the mindset, the right mindset, in order to create the best plan for you here in this space. And, you know, the goals, and I don't know if you picked up the subtlety in what he said a minute ago, the goals that you have. I mean, you should set the goals and step goals along the way. But the end goal, whatever that happens to be, X number of dollars by X number of time or whatever it is, might stay fixed. But the way you're going to get to that goal needs to be flexible. It needs to change because, quite frankly, not only is the market going to change, not only are projects going to change, but you are going to change. Your needs are going to change. What happens with your life is going to change. It's just an inevitability. So if you are rigid, you will fail. I mean, let's just put it right out there. If you're rigid in the way you're doing things, you're going to fail. You need to remain flexible. And the art of flexibility is not as easy as it sounds. That's why I started out with talking about mindset, because it starts here. It just does. And I know I kind of just went off on a tangent, BC, but like,
no
add anything you want to that, because I think it's an important point to wrap these first couple of pieces we've talked about together.
I mean, a big part of that flexibility is being able to address your current state and then being able to look forward far enough that you can adjust where is needed. So me, as a 29-year-old youth, we'll say youth, of invest a little bit riskier. I have those aggressive stock plays, whereas if I was your age, CCM, I might be like, okay, well, I've done my aggressive stock plays. The S&P 500 is going to get me 10% year over year, and Bitcoin's going to get me 42% year over year. Maybe that's all I need right now, because I'm not worried about investing incredibly hard and growing my wealth. I'm more concerned with keeping my wealth. And those are the things that, as you are progressing along your journey, you're going to need to take into account. Where it's like, cool, yeah, SHIB can rib 42% in a day, but if you don't take those profits and keep those profits, then what did you do with it? It went up 42% in a day, went down 32% the next day. Now you only have a 10% gain. You could have just got that in the stock market
without all that added risk. It's funny. I'm going to go off on another tangent. Here we go. But BC mentioned that I am generationally challenged, and he is correct. But with that thought in mind, I want to point out something that I've highlighted in other live streams, and I'm now creating an entire series, or at least as of the recording of this particular video, an entire series directed towards seniors. So for those who are 55 plus, so generationally challenged. But anyway, because I can tell you from personal experience that I find it difficult to this day to get out of the mindset that BC has with regard to his investing. He highlighted, like, I could be a little more aggressive because I'm in my 20s, so I got time. He has a longer time horizon. And as much as I would like to think I have a long time horizon, but I have to literally work diligently because I feel like I have that time horizon, but in actuality, I probably don't. So I guess to the point I'm trying to make is that you've got to learn to adjust according to the reality of your situation. And sometimes you can even play around with that, because even though I have adjusted my situation and investments back considerably to a more conservative end of things, I still every once in a while put a little bit on, in the gambling casino there. You know what I mean? Not a lot, but just because it could be I feel okay about a project and don't mind, so whatever. Or I just think there has some upside potential. I won't mind ripping out a little bit of gains. So again, but that goes on my risk tolerance, and everyone is different, and that's something we got to talk about, I think, in a minute. BC, is understanding. I know we've touched on it in several different videos here, but it probably plays into this one a little bit more in setting a success plan for the space. But let me just wrap this up before we move there by saying, especially if you happen to be a senior coming into this space, and it's something that this space is not like the TradFi space that you're used to. So I'm going to suggest, link is in the description. Go ahead and start watching that series from beginning to end. I talk about a lot of the myths in the space. I talk a lot about a lot of the mindset shifts that we need to have for those of us who are older in order to operate and succeed in this space, not get crushed because it's easy or get scammed because it's easy. Make sure you check out that series again if you are a senior. Now, if you're not, that doesn't mean you can't learn something from that series, but I'm going to suggest that the series that we're literally in right now is the one for you. So how do you figure out what your risk tolerance is? There are a lot of ways to do that. Have an entirely dedicated video just to that. Link is in the description. Make sure you check that out. Jimmy Jim did a lot of good explanations in that particular video. But BC, not that we have to go into it extensively, but how about if you can give everybody maybe a 10,000 foot view of what they should understand as they're developing their plan here?
A big part of making that plan is going to be taking into account risk to reward. And as you progress in age, your risk to reward should change with that progression. A big and easy way to find out what your risk to reward tolerance is literally throwing your money at things. Kind of within your plan, though. Say you want to test that risk to reward out. You go in there, you find yourself a little bit of a mid cap, where you come in here and just outside of that top 20, top 25, and you find that you're like, okay, well, we're going to throw, let's just say $500 at it, and you ride that out. Well, are you okay emotionally with the quick moves to the upside, and then also just as quickly watching some of those gains diminish, but realizing that at the end of it, you might come out with that 5, 10, 15x. That's kind of how you test your risk tolerance. You might do it with a much, much lower amount of money. I just threw out a random number there, but that's kind of how you come in here and test what your risk appetite is. Emotionally, are you able to handle the ride up, the ride down, the ride back up? That's one way to look at it. Another way to kind of get in there, if you're a trader, is kind of test what you're emotionally able to handle in your trade. Say you're trading on that 15-minute chart. Maybe 75x leverage is a little much for you to handle. When you watch that 1% dip to the downside, you're like, oh crap, oh crap, oh crap. Maybe I need to move my stop loss. That's how you know that your risk appetite is a little bit smaller than what you're trying to play with there. And the only way you're really going to find this out is by dipping your toes in the water. And that's why a lot of the time I tell people, don't start out trading. Start out, throw your money at the market, because putting your money in there to work for you is going to be better than not putting your money there and not knowing anything. So over a couple of year span, or maybe it's not a year span. Maybe it's 6 months for you to really get your understanding in there. The time horizon is going to be different for everyone. I got a buddy that started trading in 2 years. I got a buddy that started trading within 3 months because he just started throwing money at there and was like, you know what? I like this. And really found what his risk appetite was very quickly. But he followed that plan, where the plan was, hey, I'm going to invest set amount of money and I'm going to watch the markets. I'm going to see how they move off of this week's data. I'm going to see how the markets are affected by the current news that's going on. Things like that will kind of help you on your trading journey or investing journey, whether it be long-term, short-term, medium-term. All of this together, well-rounded, will help you find out both what your risk tolerance is and kind of get you on your time horizon, because you do want to have those shorter term plays that have a little bit more risk to them with a lot of upside potential. But what do you do with those gains? You store them in something that's going to get you longer term wealth.
BC unpacked a lot of stuff there, but like I think the key point that I want to start to focus on is the fact that as we're going through this video, I think you're going to see that we're more focused in helping to direct you and guide you into a more of an investing situation than we are into, hey, get into trading. Because matter of fact, in a previous video talking about having reasonable expectations here in the space, myself, BC, and Trade Intuition had that very discussion, and more than a couple of times it was said right there, listen, if you're just coming into the space, man, don't start out trading. That's the wrong place to start out, right? I mean, start out with, like BC just said a few moments ago, dipping your toes in the water with a little bit of investment. And I'm going to go out on a limb here. Again, not financial advice, not a financial advisor, old guy interwebs, but I'm going to go out on a limb and say, Bitcoin, start dipping your toes there. Start holding on to that there. And BC mentioned, like, you're understanding your risk tolerance. So like when things go down, does it hurt? Does it like you get that pit in your stomach kind of thing? And now Bitcoin is definitely a volatile asset, no argument. But its volatility, in my opinion, has lessened over time, especially since like 2018. It has definitely lessened in the way it pulls back. That being said, when it pulls back, even if you get in that pit in your stomach, I would suggest to you that you look at the adoption that's happening and realize that Bitcoin, it's going to come back. It's going to be that asset that comes back in price and probably exceeds your expectations in price. Again, not financial advice, but there's just something for your consideration as you're looking into this space. But again, if you are putting your money into an asset, and when that asset falls back in price, you're hurting, like you're just like you're feeling sick to your stomach, that ain't for you. You've overextended. You are in a risk situation that you are adverse to. Easy way to know it. Unfortunately, you may lose some money in finding that out. Just to be clear, which is why BC mentioned, like he said, oh, let's say $500, but then he's like, that was just a random thing. Start with less money. That's a smart idea. Start with less money. Feel it, understand it, get comfortable with it. Okay, boy, have we gone all over the place here a little bit. Yeah. But see, here's the thing. And BC, I'm going to let you jump in. I just want to kind of set the table. To me, I know it seems like, again, the structure of this particular video is not really like bullet point for bullet point. And it's on purpose that we're doing it this way, because much like we said, you know, you need to be flexible in the way you're approaching your plan and reassessing and so on and so forth. Well, sometimes just being in this space, you need to be flexible and understanding, and how you come up to developing all this needs to be done that way. And sometimes the best way to do that is through this, I don't know, discussion portion. And if you find good communities here to bounce ideas off of, get information from, you're able to do that on a much quicker scale. All the time, throughout all of these videos you've seen, I've talked about two major communities here. We've talked about Piper Academy. Links are in the description. We've talked about Billy Goat Tales. Links are in the description. And I'm not saying they're the only two. However, I think that you will find an array of people in those two communities that some of them will resonate with you and your purpose. BC, I went down a rabbit hole again, brother. Feel free to go ahead and add into that, and how you see that as, you know, helping to create the success plan, man.
Well, I know you talked about starting in Bitcoin, and one thing that I'll kind of touch on there was, even if you had bought the tops of Bitcoin last cycle and you had that investor style mindset on things where you're like, okay, you know what? I bought the top, that was 69K. Ouch, it's going down. I have this DCA, yeah, I have this DCA strategy. If you'd been buying the whole way down, buying the whole way down, buying the bottoms, buying it on its way back up, you would have been up once you got to 3/4 of the way back up to what Bitcoin's all-time high had been. And
Right.
now you would be exceedingly above that, because we got 400% gains this cycle on Bitcoin from bottom to the top that we had seen at $111,000. So a great kind of point for me saying that just dip your toes in the water, because even if you have that goal that you want to get to where it's like, okay, well, I'm trading every day, the best way to do that is to start investing and kind of take that large outlook of the market, see what a cycle brings you. Even if you bought the tops, the next cycle, if you keep buying, will have you profitable if you get 3/4 of the way back towards that all-time high.
Right.
And that brings me comfort. You know, I don't worry when things dip 10, 15, 20%. I double down. I buy a whole lot more. And those are those opportunities that I look for. Right now, since we're kind of closer to highs, I've lessened my DCA buys on Bitcoin quite drastically. And now I've started looking at like, okay, now that we're at the highs here, let's start maxing out our retirement, our retirement account. Those are things that are part of my plan, though. Now that I've made most of my gains that I'm probably going to get off of Bitcoin this cycle, you know, it might still go higher. I do have higher price targets. They're lower than what other people are, but I'm okay missing out on, say, an extra 20% to max out my retirement account right now, because I've got most of the gains I'm going to get this cycle. But that was part of my plan.
Exactly. And if you follow BC, you know that's part of his plan, because he says it like all the time on the shows in the morning, and he'll talk about stuff that he's investing in the regular stock side of things and on the crypto side of things. So he's living the truth right there as we speak. And thank you for kind of bringing that together. You know, you mentioned one thing, and it's not something we talked about too much in this series. You and I actually hit on it during the tax video, but IRAs, you were mentioning about maxing out your IRA. For most of us, IRAs, 401ks, 403bs, those kind of things, for those in the US, obviously, those are things we're used to with regard to traditional stocks, that kind of thing. But there are also crypto related IRAs that you might want to consider, and I'll put a link in the description so you can go do that. I got no affiliation with them. I'm just kind of sending you along there, do your own research, you know. But what do you think about that? That seeing we're kind of on that a little bit, BC. What do you think about those kind of IRAs with regard to maybe even gold or crypto?
I think most places you can diversify, the better. And if you can do so in a tax advantaged way, you'd kind of be dumb not to do it. So I know it's not
Right.
sexy, especially coming from the crypto space. We're like, oh, well, that's weird. 401k, we're going TradFi. But if you can do that fully tax advantaged, why would you miss out on free money? Because that's all that is. That's free
Right.
money that you get to keep in your pockets. Of course, I'm going to try to keep free money in my pockets and not pay the government more money than they need. I'd be dumb not to.
Right. Exactly. Exactly. And hopefully you're here in the crypto space because you ain't be dumb. You need to be here. You know it. Okay. That said, and again, I'm going down rabbit holes I wasn't intending on going down, but we're going to do it anyway. BC just said something else that is key and something I talk about a lot, although again, wasn't the plan in this particular video, but it should be, I think, part of your success plan to some degree, and that is the diversification piece beyond cryptocurrency. It's like putting your eggs all in one basket in crypto, and okay, and then you look into crypto and say, I'm just putting it into Bitcoin. And while that's probably the safest choice, maybe you want to think about something else in crypto. Get into maybe something in, like BC was talking about, top 20s in the market cap. And then beyond that, okay, I've got my crypto allocation, even if you're crypto heavy. And if you guys watched the video I did with Army Piper, we talked about being crypto heavy. And I admit it, it's just the way it is. But like, I have been doing a diversification more and more into gold and silver. I use Kinesis now. So which, for those who watch Daniel Diaz on this channel, you know, big advocate. But that diversification to me should be part of your plan to do maybe more of those gold, silver, precious metals kind of things, and potentially into some of the more traditional stocks that have some good growths, that are in good growth sectors. I know I just kind of threw a lot of crap at the wall there, BC, but I mean, talk about that, because I know that you live a lot of this on the daily. So can you expound on that?
A big part of that is, not having it all in one asset class. Because, sometimes you're going to see the market gets hit and we're going down, and Bitcoin might be going down in price, and gold might be going down in price, and the housing market's going down, and your tech sector might be going down, which is a place that I know a lot of people have been dumping money into
Yes.
the past several years,
Yes.
tech heavy. And that's one of the things that my buddy showed me his portfolio. And I was like, hey, bud, you're kind of tech heavy there. You might want to look at a little bit of diversification, because if the tech sector is going down, what are you going to do? It's all
Yeah.
going down at once.
There goes your
And
portfolio.
yep, exactly. And how do you keep some of those gains that you've already made? He's like, you know what? We're at some points where we might consider taking profits. I'm going to start taking some profits and roll those over. Gold's not a sexy asset to talk about, but you
Nope.
know what's on a steady climb and has been after they depegged the dollar from gold? Gold.
Gold.
It's been on a steady rise.
Yep.
Silver, a little bit less so, but it's now getting to that point where silver is talked about. I personally hold very little physical gold or silver, but I do hold some, and I've been buying since COVID. Done pretty well on it, but mine is gold and silver mining stocks, stuff like that, where I still get that exposure. And it's a
Yep.
safe kind of asset class to go into, where it's like, okay,
I've been
I'm not
looking at those
actually buying.
myself.
Yep, I'm not actually buying the physical gold or silver, because that's sometimes a little bit of a hassle to store. I'm not trying to pay someone else to store my gold, or any of that either. I'm not in crypto because I trust people, so I will buy the gold and silver stocks. I'm still getting those gains when gold goes up 1%, that stock goes up 5%. So, steady gains that kind of expound on that gold's upside movement. And I get that security of that asset class. You want to diversify so that if everything kind of goes poo-poo, you're a little bit safer. And that's the same thing. That's why people talk about indices. If you're going to invest for the extreme long term, indices are safe because it is a basket of assets. And that gives you a little bit of safety. When things go down, you're not hit as hard. But when things go up, it's normally all going up together. So you're expounding on your gains.
It's funny you say basket of assets. I've had people that have come to me and asked about crypto since I've started back. Jesus, I've been here too long. Anyway, not as long as you though. Not as long as you. You got me beat, man. But anyway, and they like, well, what should I invest in? And after I remind them that I am not a financial advisor, and I always point them to Bitcoin first, regardless. I know they're looking for some of that other stuff. And I usually tell them, think about it much like an index fund. Think about a basket of assets, a little bit from this sector, a little bit from this, a little bit from this, depending on how much money it is they want to deploy. But so I love the fact that you just said that. I love the fact that you've put the analogy out there that you can literally use that not only in the overall plan of diversifying in all these different areas, but then diversifying within those areas. So that's like perfect.
Mm-hmm.
I think it kind of leads us into the next point that I kind of wanted to make sure that we talked about, which was something that we talked about pretty extensively in our reasonable expectations video, which is to make sure that you're educating yourself. And I'm about this space in particular, right? Because we're here about the crypto space. So, I mean, you should be having education in bigger macroeconomics and so on and so forth. It will help with what you do here in this space. But like, you need to know how this space operates, at least at like a base level, so you're able to make better decisions. You're able to, make better choices, and you have more success as you're hopefully doing your own research on whatever it is you're looking to invest in. BC, I know you do this again. You live it every day, but could you kind of expand upon that education piece?
Well, the whole point of educating yourself in the space is to not make the same mistake twice. Because if you do, that'd be kind of dumb. If you notice that something doesn't work out, you might want to figure out why it didn't work out and then avoid those same kind of pitfalls. Or if you notice and NFTs aren't playing out this cycle, maybe don't invest as heavily into NFTs. If you notice that gaming isn't doing that well, it's kind of battered down,
Right.
there's no deals really being made, maybe don't invest as heavily into that. Those are just two random asset classes that I threw out in the crypto space. It's not investment advice. If you have long-term outlooks on those, maybe now that it's battered down would be a good time to buy. But you also have to think of your time horizon. For me, the time horizon is I still have time to jump into those asset classes while I expound on my gains right now. That's my whole plan. I have plenty of time to buy into an asset class after it's actually proven itself to me. Right now, I'm a Bitcoin maxi in the crypto space, and I only buy Bitcoin in the crypto space. That's not to say that at the beginning of the run, I didn't hold altcoins. I did. I held 6 of them. That was it, though. That was it. I was like, I picked some key ones from different sectors that I personally had faith in and understood quite greatly. And I watched those assets run towards the upside, and I took my profits, and I was okay with it. Did I miss out on gains here and there? Yeah, but you know what?
Probably.
The whole point was not to be a millionaire this cycle. This whole point was just to be getting better gains than I would in my traditional markets.
Yeah, I mean, you hit the nail on the head with the fact that that's the wealth mentality versus the get rich quick mentality right there. That you just articulated that great. The other piece that you pointed out, I think, that needs to be said is you only had 6 altcoins. Now, as of the recording of this video, I don't know how many hundreds of thousands of altcoins there are.
Somewhere around 30 some odd million.
Oh, okay. Well,
Yeah.
I'm way off. But see, they're just
bit.
building them every single day. And here's the key: the majority of those, I'm gonna lay it straight, are shit. Okay, they don't have utility. They have nothing that even makes them worthy, in my opinion, of being in this space. Not a fan of a lot of these, especially a lot of the meme coins that are out there. That being said, what BC said is a good strategy. He had a half a dozen that he knew, he understood, he was comfortable with having money in those to be able to get the gains as they came through. And that is a good piece to your plan when you get there to be able to accelerate those gains. To have the ones, do the research now, do the research while they're all beat down. And like he said, like he picked a couple of markets that I have coins in, but like he just said, he's like, maybe now's a good time to invest. And that's why I was like this, because yeah, who added to their holdings in that? This guy, because I'm getting it at 100% discount almost from its all-time high. So yeah, why not? Because I did my research. I feel comfortable in those projects. It's not just like I'm throwing it against the wall. I think long term, and when I say long term, I'm talking maybe decades, those are going to play out well. You need to make that idea, that mindset part of your plan. Only a few. Keep it simple. I kind of want to point out, I'm hoping as you're watching this video, you're realizing that we're revisiting a lot of these different things as we're mentioning them all throughout what we're talking about, because the education plays into the goals, which plays into your overall plan, which plays into your timeline, which plays into your reassessment, this whole plan, if you take nothing else away from this whole plan should be flexible and fluid. BC, tell everybody and put up anything I might have forgotten.
Well, I'll touch on a big part of that whole, as you progress further into life, aspect of adjusting your trading or investing strategy. You know, it's kind of unavoidable to live life without ever having to go into a bit of debt. Me, right now, I'm a little bit ahead of some people in that whole getting your debt down plan, but I also have had less debt. There's people that have mortgages out there. I don't have a mortgage.
Yes.
But as you are able to pay that down more, this now frees up your capital to invest a little bit harder. And that's one of those points where maybe that's a point that for now is fixed because you have these certain debt payments. But as you progress a little bit into your life, you know, they say the average person buys their first house at 33. Well, if you are really big on not living in debt, paying it down a little bit faster to free up some of that money to be able to invest a little bit harder. Maybe that's part of your trading plan. Maybe that's part of your trading or investing plan. That needs to be written down within it. It's like, okay, well, every month we do, say every other month, we do a half payment on top of that mortgage. So we get it paid off in 17 years instead of 30. Well, now this opens you up to, instead of, say, doing that recommended 15% allocation to investments. Now this frees you up to do 25% investing towards your future. That's a whole giant window of opportunity where now
Yes.
you can take a little bit of risk here, and then you can have your safety here, and you can readjust your allocation strategy. But you can't do that if you don't have that extra money you can throw down. So just a little touch on that one, because
No, that's great.
it's so hard to
That's
live
great.
life without going into a little bit of debt.
That's so true, but you're using it wisely and able to pay it off. That's kind of funny that you bring that particular example up. Jimmy Jim, in the risk tolerance video toward the end, he talks about something similar. He actually said that, so for example, if he wants to buy a new car, he does two things. One, he puts a significant down payment on the car, so that significantly lowers what his payments would be. He then tries to extend those payments out to whatever the maximum term is these days. I don't know, 7 years, whatever the hell it is. But then when he pays
96 months, 96 months is the longest you can go on a car payment, which is absolutely insane.
It is
Talking
insane.
about like almost 10 years to pay on a car, but those
Insane.
payments are super low.
Right. And now, so he extends it out that far, but then what he does is he pays it like he's paying it on a 4-year term.
Mm-hmm.
So much like you were just saying, maybe put an extra half a month towards your mortgage. Well, he's basically doing that on his car payment. So that same idea, that same process applies to whatever it is that you're utilizing that debt for. And that's, in my opinion, utilizing debt in a positive way, as long as you're not carrying it. Because as we record this video, credit card delinquencies and consumer debt delinquencies are at all-time highs. And that is, to some degree, a reflection of our current economy and dollar printing and so on and so forth. But again, not what this particular video is about. But if you are wise in the way you utilize this and take into account what BC just laid out, man, will you be moving your plan in the right direction. I mean, just right direction.
That's kind of why I wanted to touch on that, because debt is a big part of the American economy, and debt is a big hamper of people being able to get to where they want to in life. And being strategic with your debt is a big part of how you get along your investment journey. Maybe you have 3% interest on your mortgage, and paying that down quickly isn't as big of a deal because you could just place that extra money into the market and get 8%. That is strategic. But you have to have that as part of your plan. You got to have that thought process and think about it. Maybe it's okay to hold a 3.5% mortgage because you're investing all that extra capital and getting 8%. And once you have a large amount, you're like, screw it, let's just throw some of this extra money at the mortgage anyway. But you can't do that unless you've thought that whole process through.
Yep. Facts. Again, alpha right here. Right? Alpha. Now, you know what, BC? I love when we have these conversation style videos because the time just like flies. We're already like 50 minutes into this video, and it's like just wow. Again, this video is meant to give you a guide. It's meant to give you a framework, guideposts for you to start doing your own assessments of your own situation, because everybody's situation is different, to give you some things to think about as you're setting up your plan, and to help you to understand that, listen, you got to be flexible in the way you're doing it. You got to be able to flex with what's going on. But as we try to wrap this thing up a little bit, BC, is there anything else you want to throw out, something you think maybe we forgot that we need to educate people on or make sure is a part of this video? Anything else you want to throw in there?
Probably the last thing that I know we touched on in the last one is treating your investing as a business. You know, that's going to
I
be
wasn't going to bring that up, but I'm glad you did. I'm glad you did.
And see,
Go
part
ahead,
of that,
please.
Part of that touches on, you know, my whole where I was talking about earlier, where I was trying to max out my retirement accounts. There are ways where you can strategically invest to have that be the most tax advantaged you can. And as you get to a certain, you know, price point where you're gaining a certain amount a year, you might want to start branching out and looking at those strategies. And that's just kind of something you can get into the further you get into your journey. Maybe it's the strategically best for you to open up a trust fund and have an LLC pay you out so that you're paying less taxes. Who knows? You know, that's something that as you get into your journey, you need to kind of be open to and have a plan for. How do I strategically invest the best that I can and the most tax advantage that I can and the most long term that I can? Because we're not here for the short term, we're here for the long term. And I want to protect the most of my capital that I can, and that's another way to do so. And it's not for everyone.
No,
Some people are some people absolutely fine leaving their money in those funds with a bank. Say they handle your retirement account, or you're okay paying those long-term gains, those long-term gain taxes, instead of having it paid out to you directly through a trust. You need to find out what works best with you, but you need to have all of those points of knowledge as you progress down this journey. So
yes.
just something
And
to
like I
think
said,
about.
I wasn't going to bring it up, but I'm glad you did, because you know what? Winner, chicken dinner to everybody who's watching this video, because again, you've heard it I've lost count of how many videos and how many different people who have not only been in this series, but have been on my channel, who have come to visit us on Crypto on the Rocks, who have done all this stuff. I like I said, I've lost count. Are you sensing a theme? You should be. Listen, consider what BC just said. Even if you necessarily don't start out with creating the business, I'm going to tell you straight, I didn't do it. I didn't start out that way. Quite frankly, I'm sad I didn't start out that way, but that's because of where I have turned, because my plan here changed from just trying to make a little extra money when I started out to I'm in this for the revolution, baby. I'm in this to change the wealth profile of my family. I'm in this to make sure my grandkids have wealth. It's a completely different shift from where I began my journey here in this space. And to that end, that's part of why you need to have the education in different areas, like BC said, because it's not for everybody, but maybe it's for you. And the only way you're going to know if it's for you is if you do the investigatory work to figure that out. That's the only way. And for a point of order, we are going to have an entire video dedicated to that, possibly two. I have a different plan. I'm thinking about trying to bring someone in to specifically say, here's how you do that. And they will, I'm hoping, put themselves out there to say, I will do it for you, but this is what we're going to do, kind of thing, to give you the exact plan. And then I want to try and bring in people who have done it to then have that discussion as to how they live that advantage or disadvantage. Is it a disadvantage? Who knows? Again, everybody's life things are different. So anything else you want to throw out? I'm afraid to ask because you're going to come up with something else brilliant, like, ba-damn.
Honestly, that was kind of the last one that we hadn't really touched on. And, you know, I think it's the most crucial part of when you're investing is you need to come across it like a business. So if you don't have that foundation, all the rest of those points kind of just fall apart.
Yeah, potentially. Yeah. Yep, potentially. I agree. And especially if to your point, especially if you are going to be looking to do a generational wealth kind of thing. I think that's just a must. I agree. All right, folks. Then we're going to wrap this thing up. BC, any parting words of wisdom for the people on setting up a success plan as we head into our next module, which is going to get much deeper into things like blockchain, what is cryptocurrency, what are tokens, what are smart contracts, you name it. That's what's coming up in the next series. But before we get there, how do they set their success plan up right now? Any words of wisdom, parting words?
You know, all I'll say is find what works for you to where you want to get. It's not going to be the same for everyone. My style is extremely different than a lot of other people's. And you're going to hear about a lot of strategies the further and further you get into the space. And you just have to find what works best for you mentally, emotionally, and then monetarily. And those are those key points that you need to take into account when building your plan. What can you handle emotionally? What can you handle monetarily? And what can you handle mentally?
I would just like to say, listen, I found that one of the ways I've learned a lot of what BC just mentioned there to help figure out what was for me was two things. One, actually doing it. And in the fact of losing money sometimes in the process of doing it, I'm going to just be honest with you, okay? And two, by finding people. Find your people, they say, right? Finding people who had similar mindsets, were similar age to me, who had similar goals to what I had, and bouncing ideas off of them and just having, quite frankly, conversations like this with them, because those are the ways that you're going to adjust your sails, as they say, and move yourself in the right direction. And that's how your plan grows and your plan succeeds, in my humble opinion. All right, folks, that's it. We're going to wrap this thing up. BC, man, thank you so much for being here today and just like laying it all right out there in a nice, easy to understand format. I really appreciate you. And guys, BC is going to be back. I know he knows it already, but I'm just warning him now. BC's coming back. Thanks, man. I appreciate you.
Well, I'm looking forward to the next one, and I will see y'all at the next one.
All right, that's going to do it for this video. I hope you were able to get some great information to help set you on your way here in the crypto space. Thank you again to BC PortCorp for being involved so much in these educational videos. This is going to end Module 1 for this training series, but Module 2, when it's ready, will be right here. So head on over, and I will see you there.